What's going on, guys? Just gonna do a quick trade recap on a CRM trade that I took on June 28th, which was not this past Friday, but the Friday before. And part of the reason I'm actually doing this trade in particular, is because a couple of people actually hit me up, um, asking why I took this trade or how I knew to take this trade. Because I'm not sure if you guys remember, but on Thursday after CRM had that super aggressive push up, um, and premiums were just like multiplied insane. Had like a, what is it, from below 245 all the way to almost 259. Like a 14-point move, super nice push on the upside. And if anyone remembers, the premiums just went crazy, especially on a Thursday. It paid really, really well. So that day, I missed this entire move, but I said that I had like a really nice trade for the day after. And I did. It ended up working out for me. It went exactly according to my plan. I just needed the pieces to fall into place, and I'll just kind of explain to you why I took this trade or why I had confidence in this trade, and then I'll just kind of walk you through, my position sizing and stuff, and how I scaled out. So the reason I'm doing this as a video is just because I feel like it's way too much to type out, and I could do this in like, a quick 5 minutes rather than type out a whole paragraph. It's kind of hard to explain over text. So essentially, CRM had this aggressive move on Thursday. I missed it basically in its entirety. Um, but one thing that really interested me is that CRM pushed through the supply zone that I had charted, and rejected 258.60, and came back into the close and kind of held around this area, right? Which was that's exactly what I like to see. So it's basically what this trade was a big break and retest, right? So it broke through supply, it came back down. Now supply has turned into demand, and what I was looking for was a hold of demand for an aggressive push up the next day at the open. I decided not to chase. I really don't like chasing aggressive moves like that. Even though if I chased, I probably still would have gotten paid, as long as I didn't get in like, all the way up here, which is just not what I would do as a trader. But what I've noticed is like when we push through supply zone this easily, the upward momentum is really, really strong. Usually we can maybe chop around and then get a push up, but this just really just broke and just kept going. So the trade that I took at the open that day, I only took a couple trades that day, and this was the first one. So what I really, really liked about the pre-market is that it held right at my supply demand level. So it looked like it pushed up here, came back down, and my trigger to enter, I entered basically as soon as right at market open. But my trigger to enter was once it wicked down and it held this area. That gave me confidence. Going into 254, I was looking for a hold of the 253.50 to 254 level here at the open, and it kind of just gave it to me. Once I saw that wick down to 253 and then a push up, that kind of was just all the confirmation I really needed for me to get into this position. So um, that was the reason for my entry. I'm not huge on opening drives. Usman is, I feel like, a better opening drive trader than I am. Um, but sometimes I'm a little bit hesitant at the open because we get a lot of whiplash. But this time, because this is kind of a setup that I'll take any day of the week. Um, this is essentially what Meta did on Friday as well. But I ended up not taking this setup because I took CRM instead, which was stupid of me. But um, yeah, so essentially it held this 254, uh, 253 to 254 area. And once I saw that, I knew that this maybe could get that upside continuation and retest the previous day's highs, which it did exactly to the T. So beautiful trade in my book. I really, really liked how this played out. And I got in with 20 contracts at the open. Right here, I have a picture basically of the callouts are all here, by the way. If you scroll up to the 28th, yeah. So these are all the callouts. I was in basically a minute into the open, 9:31. I got in with 20 contracts, and I just essentially I was scaling out at each and every level that I had, and just kind of let my position go. It was a fairly easy trade to stay in. Yeah, we had some wicks on the downside, but because the entry was just so good, I was able to hold. So basically, most of my position, I would say I was out half of my position by what time was it? 9:34, right? So into the first candle, I was already out half. Now, some people may say, "Oh, that's an aggressive scale out," but with a position of 20 contracts, I like to just lock in profit because of this, right? This wick here. This easily could have rejected, you know, the way I like to trade is I like to see it hold above levels, right? So I had 256.60 as a level, and once it dipped below that, then I my main concern is that it holds the next one. If it's able to hold the next one, I'm gonna stay in the position, or I'll be more enticed to stay in the position. If it's not able to hold it, then I'm looking to potentially, either scale out more, lock in more profit, or, um, you know, get out of my position fully. But this one held all of its levels, all the levels that I had charted, and basically set new highs. And you see, as soon as it starts setting new highs, I started charting new levels here. See, these are new levels. You can tell that they're new because they start on this day. So that's basically how I trade it. So I scaled out pretty, like I said, fairly not I wouldn't say it's super aggressive, but I just like having this cushion, right? This trade was already up 100% at this point, right? I like having the cushion, and then I'm able to, you see my scale outs get less aggressive, right? So there's like 3 minutes into the till the next scale out, another 4 minutes to the next one, and then I was basically out down to my runner 5 minutes after. So I scaled out the first portion of my position. I took off 4 contracts, which is 25%. Um, then I took off another 4, if you could see here. So my first scale out, I'm sorry. So I took off 6 contracts at first at 225. They split up on this. I'm not sure why, but that's the price right there. 225. I was out 6 contracts. The next scale out was about a minute and a half later, we'll say, almost a minute and a half. I took off another 4 contracts, and so on and so forth. So I did I'm sorry, 6, 4, 4, 2, 3, 1. You can scale out as you want, right? But you just got to anticipate the pullbacks. So in this situation, I was basically just scaling out as it approached key levels, right? My main concern in this trade was the approach of the previous day highs, right? Because I knew if we could get this volume to continue, right? So the volume dropped on the second 5 minute candle, but then we got another burst of volume going into high a day slash previous day highs, and that for me was indication enough that I should continue holding, right? So if you see the highest price that I got out was around $5.03. And at that point, I was basically out 95% of my position and down to my very last contract. And you can see how aggressively, just how aggressively, 946 candle was the exit of the majority of my position. So right here, I knew the 260 level would be a strong level potentially, and that we could reject there. So once we wicked out above 260, that for me was an indication I should probably be getting out majority of my position in case of a hard rejection. And what did we get? Exactly that. A very hard rejection going into the 260 level. We could not hold above it. And it gave up the level below, right? And then it gave up the level below that. And you can see just how aggressively, especially on 0DT, how aggressively these premiums get burnt. I lost $1.70 in premium on that scale out within 2 minutes and change, right? Just on my runner. So my runner, my plan was just kind of let it be, and you know, if it holds the next level below, I'll stay in that runner and see if it can potentially pay me, 1,000% or whatever. The risk at that point is, you know, you're okay. You're so far. I was in 255s. I was way deep into the money. I was comfortable in my position. I was way up, and one contract of 20 wasn't really going to do much damage. But that just goes to show you on 0DT, I lost $1.70 in premium on one rejection. That's why you don't want to chase these moves either, right? It's too dangerous of a game to play, especially on 0DT. And when something has a super aggressive move, I know how tempting this can look. But if you get in here, say you went in for the 260s, right? That move right there is just gonna crush you. It's gonna and CRM premiums move super aggressively, from my experience. So I'm gonna post my fills and everything here. This trade ended up playing out really nicely. I made 3,700 basically on 20 contracts. It was a pretty stress-free trade, but the point that I like to make is the confidence that gave me, that gave me, my edge in this trade. I saw an opportunity. I saw a pullback to a key level. I was patient yesterday, the day before. I did not take the trade. I did not chase. I didn't get caught in this. I let it pull back. It broke this zone, and it came back to retest it, held it, and had a beautiful move to the upside. I think overall this trade was like from $1.30 or $1.35 to a peak sell of like, a little over $5. That's like 300%, something like that. So these are the setups that I really like. And guys, I can't put enough emphasis on this. You need to learn how to chart, and that gives you the confidence to go into a trade and stay in a trade. I know so many people in the chat who would be in this trade and would be like, "Oh man, pulled back. I got out too early," right? If you have an entry like this, there's absolutely no reason for you to get out your full position on a pullback like this, right? You may see the premiums like take a hit. That's fine, right? But you once you lock in that cushion, and that's why I'm so big on getting out big chunks of my position on aggressive pushes, right? Because then at least you have the cushion that worst case scenario, the rest of your position goes right back to your entry. Majority of the time, you're still going to be green unless theta just like burns right through your premiums. But otherwise, you're in a good place. So these are to answer the people. I know this is a little bit delayed. It's about a week late. But to answer those people who are saying like, how did you know, the day before or after market close that you might have like a really nice trade for the next day? This is exactly how I knew. And this is a break and retest strategy. It's one of my favorite things to play. I really like it. Hold of levels and pushes, right? So, and getting in this early, you may look at CRM here like pulling back pre-market. You're like, oh, maybe it's gonna give some downside action, but no, that's in this market, it's not that straightforward, right? It pulls back to a key level, then bounces. That's just how you got to play these. So yeah, again, this trade in its entirety lasted around 17, 18 minutes. 20 contracts, got in at this price, got out. My final fill on the runner was there, but the majority of my position I was out at 503. So pretty good returns on such cheap premiums. You know, even if you went in with five contracts, you could make some really solid returns here. You go in with five contracts, you scale out two, then one, then one, then one. You can make a good six, 700 bucks here easily if you scale out appropriately. And that's the beauty of zero DT. The premiums just move amazing. And CRM, I remember the spread was a little bit wide at the open, but thankfully I got filled. And basically, I just held it straight from this reclaim of demand all the way up. And the yeah, my final exit was at 9:48:49. But if look at the 1 minute chart, let's see if we can do the 1 minute. No, I gotta go a little further back. It's 28. So if you want like the exact, obviously you can look at this on your own, but 9:46 and 10 seconds was or literally almost peak sell. You know, as soon as I did not see that it could hold 260, you know, obviously it was above 260 the candle before. I'm sure the premiums were a little bit higher here, but 10 seconds into this candle, I was out. Majority of my position. And then I had the one contract, you know, I could do whatever I wanted to do. But you see here by 9:48 and 49 seconds, which was this candle right here, basically the premiums took an aggressive hit. So you don't want to get caught chasing up here. Going into key levels, do yourself a favor, just, you know, practice discipline and don't allow yourself to get caught in a pullback like this because you're chasing an aggressive move. You know, you see here even this is actually why I didn't get in right at the open. You see my entry was at 9:31 and 12 seconds because I was waiting for the hold of this demand, this wick action. Once it wicked down, then held, then I got in on this candle. So I hope that helps you guys kind of see basically how I scale out of a trade, how I enter my criteria for entering. You know, there's not going to be a perfect setup every time, but for me, you know, I was so confident in this setup that I literally called it out the day before. And, you know, it worked out really well. So yeah, guys, I hope this helps. Again, this would have been way too much to type, so I figured I'd just do a little quick video for you guys. So again, if you want to go look at the chart on your own, it's it's CRM on June 28th at the open. All right, guys, hope this helps. I'll see you guys online tomorrow. Peace.